Good morning, everybody. Thanks for joining our forum today. I wanted to go ahead. I'm Rochelle Langdon with One Digital. I'm our Director of Compliance Integration as well as the Sponsorship Chair here at the Atlanta Health Underwriters Association. And I wanted to just introduce Don Chimay, one of our sponsors today. Thank you very much. And Debbie Buck. And they'll tell you a little bit about their sponsorships and their organization and before we have our main speaker. Thank you.
Well, Debbie, I'll let you go first. Ladies first today.
Thank you. Good morning, everybody. My name's Debbie Buck. I'm the Director of Marketing and Operations with Bankers Worksite. Bankers Worksite is the voluntary benefits division of Bankers Fidelity Life Insurance Company. We're here in Georgia in Brookhaven. We specialize in voluntary benefits. We have a portfolio of supplemental health and financial protection products and services. We work with employers of all sizes, and we really take pride in providing best-in-class customer service, as well as administrative solutions. We consider ourselves to be distinguished in this benefit space by developing products that have flexible plan designs that employers are really looking for nowadays. The one-size-fits-all approach is kind of passé, and we're into really customizing our solutions for each employer's needs and wants. Bankers Fidelity's been in business for 60 years, so this is not a startup by any means. We're A- rated. Other, I'd say, key points or solutions for us are really that billing and claims part of the business that seems to be a pain point for a lot of employers. So, like I said, everything's done in-house. We don't outsource anything. So if you call us, we answer the phone. If you're not getting a company off-site taking care of our claims or billing, customer service is all right here in our office in Atlanta. Right now, our portfolio includes critical illness, accident, short-term disability, hospital indemnity, and whole life. If anybody would like to speak further about our voluntary solutions, I can be reached at dbuck@bankersworksite.com, or you can always email us at sales@bankersworksite.com. Our web address is bankersworksite.com, and I look forward to seeing you in the virtual exhibit hall throughout the day. Thank you very much.
And I'm Don Chimay. I'm the Individual Disability Insurance RVP for Principal. Again, thanks for giving us a chance to sponsor today. I am, in a sense, representing the entire suite of Principal's solutions. As many of you know, we are focused very heavily in the small to medium-sized business market for those solutions, specifically working with mostly group solutions in that small marketplace. Group LTD, short-term disability, group life insurance, dental, critical illness, and we also have a full suite of individual solutions. I am, as I mentioned, the individual disability insurance RVP, so we work with the individual product, the overhead expense product, the buy-sell product, the key person product. We do a lot of work with executive benefits planning in that space. And then in addition, we have a full suite of life insurance products. Those life insurance products can be accessed through our BGA network. We've had some very, I tell you, during the COVID, there's a lot of conversation around what is kind of working out there. I will tell you that our life insurance sales, disability insurance sales are very strong. And on the group side, we do see a lot of people still trying to look to see, are their rates as competitive as they are? You guys are all moving into your fourth quarter, and just making sure that we are being as competitive as possible. We have done some rate holds in that space, but we're going to be coming out of those rate holds later in the year. And we want to make sure that, hey, if you've got a client that needs some competitive solutions, we want to take part in that. You guys probably all know my counterparts, Don Weitzel, Joni Barocas, Dennis Crilly, April Barrett. We all kind of stand by to help you in any way that we can during this season. So again, thanks for the chance to sponsor, and we look forward to help you. Please visit our virtual booth. Later on, we put I put a couple videos up in there, just some client approach videos. It's also being manned by Macy Adams and Marcos Brown, who have put up a full suite of some group solutions and some ideas in there. So we look forward to maybe seeing you in the virtual booth a little bit later as well. Thanks.
Thank you, Don. We really appreciate you and Debbie's sponsorships today. And without further ado, I will introduce our speaker today. And our speaker is Adam Reuter. And welcome, Adam. Thank you so much for joining us. And I will let everybody know that this is approximately an hour-long session, and we are recording it and hope to share that with any that would like that after the forum today. And our speaker again is Adam Reuter. He's a regional sales leader with J. Manning and Associates, and he's been there. Has nearly 20 years in his career within the employee benefits insurance industry, and he has vast experience. His vast experience has afforded him the opportunity to work with some of the largest employee benefit insurance carriers. So thank you so much. His topic today is long-term care, and I will turn it over to Adam to go ahead with his presentation. Thank you so much for joining us, Adam.
Great. Thanks, Rochelle. Good morning, everyone. Appreciate your time and attention in this kind of a different circumstance that we're in right now, but really appreciate the opportunity to speak with you all today. Our firm, J. Manning and Associates, we are a national independent long-term care insurance brokerage, consulting, and enrollment firm. Kind of three different things all in one. And our business model is unique in the sense that we're really built around supporting employee benefit brokers, consultants, with them and when their clients want to pursue long-term care insurance. And so the goal of our our presentation today is to help everyone kind of understand, okay, what's the impact of long-term care from an overall planning perspective? How do employers look at it? How do employees look at it? How do the carriers look at it too? What are the different types of products? What are some of the changes that are taking place in the marketplace today? Some of the trends, kind of an overview and a comparison of really the two main long-term care insurance product solutions that are in the marketplace. And then we'll kind of talk about, hey, what's the way in which now long-term care insurance is being implemented and enrolled within the employee benefit space today? Because that probably is one of the more nuanced and unique things that maybe a lot of folks don't really understand is long-term care insurance, even though it's part of a generally overall voluntary benefits offering, it's starting to be looked at as a separate entity as far as how it's educated and made aware to employees. And we'll talk more about that today. So these first few slides, we're going to talk about what long-term care is presenting as a challenge to employers and mainly to employees, right? It's a financial issue, right? What we try to do is help employers and employees understand is when you kind of peel back what long-term care does, right? Or when someone experiences a long-term care event, if they're not affluent, right? Or if they don't have the self-insured the ability to self-insure, right? And they're going to use their retirement plans and assets to pay for long-term care. Most people don't set out when they're doing their retirement planning or when they're, putting money in their 401k in their working years to say, okay, I need to put aside more money in the event I need some form of long-term care service later in life, generally in retirement. So the point I'm trying to make here is when you kind of dial it back, peel the onion back a little bit more, you realize that long-term care insurance is actually a 401k insurance product in some way. That's how kind of we frame it up, right? If that resonates a little easier with employees, because really what we're trying to do is help employers and employees understand is by having long-term care insurance, it's going to pay for and cover and provide services that are not covered by other forms of insurance, like say health insurance and disability insurance, okay? And it's going to help them protect some or most of their retirement plans and assets, because as we all know, it's very, very challenging for someone, especially an individual or maybe even a couple, to set aside money for retirement, but then also in the event they need, each or both need care in their lifetime to live the lifestyle they had wanted to live in retirement, but then also pay for any sort of long-term care services. Okay, so what we're trying to do here is kind of give an idea about what costs it looks like today on average, but then what costs going to look like on a combined basis. And then obviously we know that these numbers are going to go down, are going to go up every single year, generally at a rate of around 3% a year if you incorporate for inflation. What's the impact on families? We always kind of say it's safe to assume that most people are aware of someone in their family or their community that's dealt with this. And so a lot of the caregiving burden is falling kind of on that sandwich generation. And the folks in that 45 to 65 age category. And so a lot of the informal care is starting within the household, right? And so that's a huge factor, because there's a huge burden. It's actually impacting the health of the caregivers, right? And so what we're also trying to help people understand is if by having a long-term care insurance policy, you're going to kind of alleviate or avoid that care burden off of your friends and really your family, right? Because that's really is a huge factor. And then it's a kind of a growing issue because we're getting older. That's the idea, right? We all want to get older. We all want to live a long life. But because of advances in science and medicine technology and the fact that we are living longer, we have just a higher likelihood and a need that we're going to need long-term care at some point in our future, generally in retirement. And we don't know exactly how long we might need it for, right? But the data says that 7 in 10 people over age 65 are going to need some form of long-term care in retirement. Might be minor, might be major, right? And then, the typical claim that lasts beyond 1 year generally lasts for about 2.8 years, right? So what we're trying to help people understand is if you look at the data and incorporate that, there's obviously a really good reason to kind of take a deeper dive as to what else is out there. And also too is we use this data for employers to help them understand hey, this is a real issue. This is something that your employees are going to face, if not now, certainly in the future. And there are ways to present solutions to the potential problems. One of the I guess I don't want to call it a trend, right? But I think what we're more aware of now, and I think what the employee benefit community is more aware of now, and especially with COVID and interest rates, being so low, is that our carrier partners now are much more in tuned with spread of risk. And what we ultimately want to do is avoid adverse selection, right? Just as we want more healthy people to enroll, along with people who think they might need it or currently already dealing with a health condition. But most importantly is that our carrier partners know that in order to get good spread of risk, in order to be able to provide the uniqueness of their proposals, their plan offerings, employers and employees have to know about this stuff. And if you've had any experience with long-term care insurance, it's a technical insurance product. It's not something that is generally enrolled initially, during, on ballot during upcoming open enrollment, which is like obviously right now. And there's some trends to that. We'll talk more about that here in a moment. But in order for everyone to be, know about the product and have access and educate themselves, you've got to have 100% plan awareness, because we know that long-term care insurance is not a product that's a good fit for all employees, right? But that doesn't mean that everyone shouldn't have long-term care planning. But in order to meet the spread of risk objectives that the carriers have, right, to get good participation, to make it an overall positive experience, we have to start with as much awareness as possible, knowing that as we kind of funnel it down, the people who really want long-term care or want to learn more about it or want to plan accordingly will then engage, right? But with long-term care insurance, because it is a bit more of a technical insurance product, we have to try and proactively engage the employees versus letting the employees kind of come to us, right? It's kind of a bit of a push-pull mentality. But what we're finding out is when we kind of use this funnel approach, when we engage the employees, that the overall employee experience is much more positive, right? We're seeing a much higher average enrollment with these products than what we were seeing just 5 and 10 years ago, when long-term care was generally put in the back of the benefits portfolio or benefits booklet on ballot, during open enrollment. Now, when we're doing long-term care, it's done on its own enrollment cycle, which again, we'll talk more about here in a moment. So what are the benefits for employers, right? This is the thing that we always want to help employers understand, is there's really 3 things that are going to be in it for them, really, to say, okay, why would we want to offer long-term care as an employee benefit? One, it's better underwriting, right? Obviously, because these are traditionally, group insurance type products, right? We're offering it to the masses of the employer, to a large population. We're going to get better underwriting, and that better underwriting is going to be either in the form of guarantee issue, or it's going to be in form of simplified issue, kind of depending upon the product, right? It's better pricing. These are voluntary employee benefits, right? So there's no gender-based pricing like in the individual long-term care market, but these are gender-neutral prices, right? So same age male and female that sign up for the same product are going to get the same pay the same premium. And we all know that group rates are less expensive than it is for an individual to go in and get this on their own in the individual market generally. And then there's also the financial wellness education component, right? As I just mentioned the slide before, this is not a product where you're going to get 50% enrollment, right? But that doesn't mean that all employees shouldn't have access or be engaged about how this could help them, because it may not be a good fit for them now, but it certainly might be a good fit for them in the future, right? As they get a little older and making a little bit more money. And so as more and more employers are building out more robust financial wellness initiatives and retirement readiness campaigns, long-term care is a really good fit within all of that because of the financial component it plays with all that. So what are the products available to employers today? Some of this is going to probably sound pretty familiar. Some may sound kind of new. But when we're helping an employee benefit professional and then their client understand what's going on, we talk about two products that really are prominent today within long-term care. One is called standalone or traditional long-term care insurance that I think we all kind of are familiar with, right? And the other is long-term care insurance with life insurance or built on a life insurance chassis. When we're speaking with a client, speaking with an employee benefit professional, we do not pivot or position one over the other, but what we try to help everyone understand is, hey, there are 2 very good and meaningful solutions out there to help your employees, right? And what we ultimately try to do is match up the product with the demographic of the group, right? Whether that's their overall size, their demographics, socioeconomics, how they want to structure the plan, whatever it might be. But what's great about today is that's something kind of new in the last few years is instead of going out with the traditional standalone products, right? Now we have both that and these long-term care and life insurance products because those are also proven to be a very good solution for employers. Here's kind of a quick overview of the carriers in the marketplace. Again, these are not going to maybe sound be too surprising for a lot of the folks that are joining us here today. But we have obviously our carriers who are in the standalone long-term care space and then the long-term care life insurance space. The good news here is that this list is actually growing, right? We're getting more carriers getting into this space, okay? Some companies that have maybe sat on the sidelines for a few years, right, have gotten back in. We know of several other employee benefit insurance carriers who are building out these hybrid life long-term care products and bringing them into the marketplace, right? So the good news here is there's a good, strong, robust marketplace for these products, right? And so that's something that we feel really good about. There was some volatility with the long-term care market, several years ago. Let's not, that's kind of the elephant in the room. We know all that. But what we do know is that these carriers now are very comfortable where they're at from a financial standpoint, from a pricing standpoint. They're really focused on long-term stability. They're kind of conservative by nature, but that's good because of what we dealt with, just 5, 7, 10 years ago with regards to carriers getting out of the marketplace and rate increases, that sort of thing. So we'll just kind of do a quick kind of product comparison, just so everyone kind of understands, okay, if we have these two products, how do they work, right? And then we'll kind of touch on what are kind of the advantages and challenges, because I think it's important, and we think it's important that people understand is, hey, what will these products do, but also what won't they do? Because there's never going to be one perfect solution, right? So with a standalone product, there's really three components that go into the product, right? And the way we kind of help an employee position is hey, there's really three decisions you have to make. One is you have to decide, okay, what's your total benefit pool or your lifetime benefit going to be, right? The floor might be $100,000 and the ceiling might be $400,000, but that essentially is going to be your lifetime benefit of which you'll be able to access plan dollars. Then from there, you want to decide, okay, what's your monthly benefit, right? From my benefit pool, how much money do I want to be able to access per month to pay for care, right? And the range is generally about $3,000 to $7,500, maybe $8,000 a month. And then there's inflation protection, right? Which is the way in which your benefits grow in value over time. So if I buy this when I'm 45, but I may not need it until I'm 80 or 85, the value of my plan has grown to keep pace with or above healthcare inflation costs. Okay, so when you boil it down, these are really the three things that an employee has to kind of take into mind when they're building their plan out. The nice part about this is with these products, it's not a one size fits all, right? So it's a very individualized planning approach for each employee. So with the long-term care and life insurance, okay, it's similar in nature as far as how the benefits, what they will pay for, right? This is a tax qualified, long-term care plan. But the way in which we build the benefit is a little bit more unique because it's built on a life insurance chassis. And the life insurance chassis really dictates what the long-term care benefit will be. So typically an employee selects a life insurance amount between $25,000 and $200,000, okay? That then dictates what their long-term care benefit will be. Typically, most of the carriers have the same monthly long-term care benefit, which is going to be 4% of your life insurance face amount, right? So if I signed up for $100,000 of life insurance, I need long-term care, I'm going to get 4% a month or $4,000, all right? The third kind of component or feature is this thing called extension of benefits, right? And it's really a multiplier of the life insurance and essentially tells us how long is my overall lifetime long-term care benefit going to be, all right? And the multiple or the extension of benefits varies by carrier, but typically it's 2 to 3 times the death benefit. So again, if I'm using my $100,000 example, if I sign up for $100,000, if I need long-term care, I get $4,000 a month, but my lifetime benefit will be between $200,000 and $300,000 of total long-term care benefits. All right. Again, what's really nice about both of these products is they're tax qualified long-term care products, as I mentioned, right? They have the same definitions of disability. It's 2 of 6 ADLs or a severe cognitive impairment. So they will accomplish and do the same thing essentially, but just do so a little bit differently, right? And that's something that we want employers to understand is both of these things will be good solutions for your employees. So we want to talk about what are the advantages and the challenges. Again, transparency is really key with these products. We want employers to understand what they will do and also what they won't do, and then ultimately try and match up the product with the employer, with the demographics. From an advantages standpoint with the standalone products, it's going to provide the largest or richest overall benefit for long-term care, okay? It's going to have that inflation protection option, right? Which is the ability to build in a compound rider that will increase the benefits, 1 or 3 or 5% a year compounded annually. So you have like that guaranteed rate of return, all right? You've got direct billing, right? one of the things that gets overlooked a lot of times is for an employer that wants to offer long-term care, right, but doesn't want to make it a payroll deduction benefit, right, or it can't because they don't have enough payroll slots left over, all right? This can be offered with direct billing, right? The underwriting is the same, the pricing is the same, but when an employee goes to sign up, they're going to pay their premiums direct to the insurance carrier and then elect to pay them monthly, quarterly, semi-annually, or annually. It's also a bit of like set it and forget it, right? Because, you sign up, you elect your plan options, you just pay your premiums, okay? Especially if you got that automatic inflation options, built in, the value grows over time for you, but also does so automatically, all right? What are the challenges? It is a use it or lose it. It's a pure insurance product, right? So if someone dies before ever needing the product, there typically is not a return of premium. There's no cash value, okay? It's going to require underwriting. There is no guarantee issue option available in the standalone long-term care space, right? Genworth Financial is the last like true group long-term care provider for the traditional products, and they don't offer guarantee issue anymore. It's what they call modified guarantee issue. The other carriers that are more like an individual multi-life, like Mutual of Omaha and Trans-American Life Secure, all have their version of simplified or worksite underwriting. So we want to make sure an employer is aware that you will have actively at work employees who have a health condition. They could be declined because of that health condition, right? And then obviously the other factor is the rate increases, right? This is less of a concern now than what it was several years ago because of the conservative nature in which these premiums are priced, right? And kind of the level setting that these carriers went through as far as how they price future premiums. But we always want to disclose that could be a factor in the future for employees, all right? But ultimately, to kind of bring it full circle, when you incorporate inflation protection, that's when the standalone long-term care plan will provide the richest and largest overall long-term care benefit available, okay? So the long-term care and life insurance combo, the advantages there is that we know it's going to pay a benefit, right? Either an individual or an employee is going to access the long-term care benefits or use the death benefit, or in some cases they could do both, right? It's guaranteed issue. That's a big deal. To be able to go in front of an employer and say, we are able to offer you a tax qualified long-term care that does not require any sort of underwriting is very compelling, right? And so, every group is individually underwritten typically, right? And so the guarantee issue limits from the carriers are going to be different for each and every group. And a lot of times depends upon the group's overall size, their demographics, but there will be a guarantee issue component there. Because of the fact that it's going to pay a benefit, right? Because it's either going to, use it for life insurance or long-term care or both. And because it's guaranteed issue, we typically see a higher overall level of participation within these products because of those factors, right? The barrier to entry is just lower than it is for the standalone long-term care products. What are the challenges of these combo products? Well, there's no inflation protection. So whatever you buy today is what you'll have 30 years from now, right? So the long-term care benefits won't change at all right? It's more expensive per dollar of long-term care benefit. Because of that life insurance chassis that's built on, because of that guarantee issue component, if you're just comparing the long-term care from the combo to that of the traditional product, you might find that it does cost more money. And then also its payroll deduction is required, right? There's not a direct billing feature capable with these carriers. It is always done with payroll. Again, that doesn't happen very often, but once in a while that is an issue, especially as an employer is moving into a new Ben admin system, to a new payroll company, that sometimes can hold things up a little bit more. Okay, so ultimately, from a what's better than the other, there really isn't, right? What we want an employer to understand is pick the product that you feel is going to have the most appeal to your largest audience, right? Is the life with long-term care, obviously because of the guarantee issue factor, because the fact that an employee will use these benefits is going to have a larger appeal to a larger audience. It just does, right? But if an employer is coming at this from the standpoint of that is they want the richest level of benefits available, right? They're okay with the underwriting component, then the standalone is going to be a really good solution. Okay. One of the other things I think that we, leave out a lot of times that is these are fully portable products, right? Which is another really compelling issue. When an employee leaves or retires from their current employer, they can take these products with them. And when they do so, whether it's the standalone product or the life with long-term care, there's no change to the premium. There's no change to the benefits. There's no change to the underwriting. They just go ahead and set up the premium payment direct to the insurance carrier. So implementation. This is, I don't think this is so much unique to ourselves, but I think we were kind of out in front of this, especially when it comes to long-term care, several years ago. We talked about spread of risk, and we talked about why it's so important to carriers. And we talked about the positive enrollment experience that we're trying to set forth for a client. And the goal is not just to get as many people as possible to sign up, right? Because ultimately, when it comes to long-term care insurance, it's a product that is bought, it's not sold. And so because of that mentality, we want to just try and educate employees as much as possible using lots of different mediums in which to do so. And then ultimately allow them to make the decision as to, yes, this is appropriate for me, or no, it's not. But at least I know I'm fully aware of what I have access to. So one of the unique things about long-term care is that when an initial open enrollment is conducted, it's not done alongside other core benefits. So typically, we're not doing a lot of open enrollments in the fourth quarter when employers are focused solely on upcoming plan year annual open enrollment factors. We're trying to set the stage as that is, hey, this should be done in Q1, Q2, Q3, away from your normal core or voluntary benefits, right? And with a dedicated, generally 3 to 4 week open enrollment timeframe, in which we use personalized and customized emails, live and recorded webinars, dedicated customized website, on-demand video library, a call center that provides one-on-one consultation, right? All of these factors go into the initial open enrollment to try and drive to that 100% plan awareness, which then funnels down to that 12.5% enrollment, right? And so we do the initial open enrollment, in that Q1, Q2, maybe Q3. We use a lot of different decision support tools to help engage the employees, right? The key factor in that is the employee email campaign. It's one of those things where we're very sensitive to employers because we're not trying to do more emails to just send more emails. But what's been proven from a lot of research and about how employees make decisions about kind of complex financial products like long-term care, it's not a situation where we can put out one email and hope they can capture all the information and make a decision. There's got to be kind of bite-sized pieces of information sent out on a weekly or maybe even sometimes a bi-weekly basis to kind of help garner that attention for it, help kind of build a foundation. So ultimately, when it comes to the last day of open enrollment, they're ready to make some sort of decision, right? Giving them kind of clear call to action. The other factor here that we're talking about is what's called an on-cycle or mandated choice enrollment. So because of our methodology and because of our approach, we're able to actually utilize 2 open enrollments in a calendar year, which is pretty unique when it comes to long-term care. So as I mentioned, the initial open enrollment is done off cycle on its own in that Q1, Q2, Q3 time period. But then what we do then is come back in during the core benefit enrollment, right? So typically, obviously in Q4, so right now, and we're doing another open enrollment for the employees. But what's unique about this is that this time around, we're not doing a lot of the same education because the employees already saw that 3 or 6 months earlier. But what we're doing is actually coordinating with the Ben admin system and building in a question into the Ben admin system that simply says is, would you like to enroll or would you like more information about the long-term care insurance product? So as an employee is going through their benefits hierarchy and making their benefit decisions, when they get to the long-term care, that's their second opportunity to take action on the product. So what this boils down to is we're actually giving employees two opportunities in one calendar year to enroll in the long-term care with the underwriting and pricing concessions, and that's very unique. And that's unique in the sense because from a carrier perspective, they know ultimately that with these kind of two bites at the apple, they're getting almost 100 or total 100% plan awareness. So again, going back to that whole spread of risk, they're comfortable doing this because they know they're getting a lot of attention on this from all the employees, again, which spreads that risk. And so, which offsets any adverse selection. And the benefit for the employees, that is, if they missed it the first time around, right, during that off-cycle enrollment, they have the opportunity now to enroll during their core benefit enrollment, in Q4, right? And again, by using this methodology, this is what's getting us to that double-digit, overall enrollment percentage, which is generally 2 to sometimes 3 times higher than the national average because of using these methodologies, right? But ultimately, that is, we try to build this around the employer. There's not a one size fits all, but there's kind of like there's kind of some guidelines and boxes that we try to fit around the client. But ultimately, there's a lot of customization and things that we do for any client because we know that every circumstance can be unique. So this is kind of just a overview and kind of a good visual that is of all of the things that we do for an employer and their employees when it comes to implementing and enrolling these products, right? And I mentioned at the start of our call that we're a broker consultant for long-term care. We're also an enrollment firm, and that really comes down to the fact that the carriers now are they manufacture the product, they insure the risk. They look to enrollment firms or other specialty long-term care firms to really go out and build these programs around around an employer. And that's really what we're doing here today. And so we bring all this to a broker consultant and their clients. And this is kind of a full service operation for us, but we utilize all of these factors you see here on the screen for employees to engage them, to educate them, and then really just to empower them. And then ultimately, like I said earlier, to get them to say, okay, yes, I want to enroll, I want to take action, or no, I don't. But by doing all these things, what we're trying to avoid is having those employees go back to their HR benefits person and say, I didn't know about this, right? Of course, that does happen every great once in a while, but we're trying to avoid that at all costs. And here's just a little bit more about our firm and how we're built and our background and our experience. We work with employers with as few as 10 employees up to 100,000. And so our singular focus is long-term care, which is unique, and it's good because we're not trying to compete with other products, right? We're all former consultants within the brokerage world or leadership on the carrier side with lots of experience, and we bring all that together to work with our employee benefit broker and consulting partners. So with that being said, I guess, Rochelle, we'll kind of open it up to any questions.
Yeah, thank you so much, Adam. That was very informative, valuable information. So it doesn't look like we have any questions yet in the chat, but feel free, all of our attendees, to send any questions through, and we'll give it a couple of minutes here. And I believe I'd just like to say, make sure that you look at your agenda. Please make sure you're visiting our sponsors. We couldn't have done this without them today. Make sure you're visiting their sponsor, their booths, and that's basically what's next on the agenda at 11.
Great. We did have one question pop up in the chat, and I'll kind of read it out for anyone that didn't see it. So it says, can we talk a little bit more about what happens to these these enrollments on subsequent anniversary dates? Is there a re-enrollment? Do you enroll biannually? What seems to work the best? So that's a great question, and probably that's one thing I probably didn't hit on well enough. Is when it comes to these products, whether it's standalone or the Life with Long-Term Care, it's a one-time only opportunity. Obviously, I mentioned that we do kind of we utilize this dual enrollment in the initial calendar year, but these are not products where we come back into the employer every single year and re-enroll the entire benefit eligible population like you would say your other traditional core products, whether it's life insurance, disability insurance, what have you. Excuse me. So new hires will always have the opportunity to enroll with the underwriting concession, whether it's simplified issue or it's a guarantee issue. So what we typically do is give the option to the employer, that is, how do you really want to enroll your new employees, right? What we have found to be really effective is that instead of enrolling employees as they become benefit eligible, and so they're making all these selections about all their other benefits and typically and likely going to skip or miss the long-term care, we do a one-time annual yearly enrollment for long-term care for new hires, okay? Now, that doesn't mean that all eligibles can't apply, but if you were eligible during the initial first two offerings and skipped those and then decided to apply a year later, you're considered to be a late entrant, but they still have access to the program. But for the new hires, we'll generally do a 1-year look back, right? So everyone that's come on board, let's say from May 1st, 2020 through April 30th, 2021, and then in May of next year, we'll do a kind of a similar open enrollment program that we did for all the original benefit eligibles for all those new hires. That has seemed to work really well, especially for larger employers that sometimes in many cases hire 100, 200, 300 or so employees, per year, or, a larger employer who makes an acquisition. Okay. Another question came up. It said, what's a typical life LTC benefit GI level during, the annual open enrollment? It's going to vary by carrier, right? And it's going to vary based upon the group size. Typically we see, four groups between about 500 and 1,500, 2,000 lives. We will see GI amounts of around 100 to 150,000. For larger groups, generally over about 3,000 employees, or more heavily centered groups on the East Coast where cost of care is obviously higher, or West Coast, we will see higher levels of GI of sometimes $200,000. And then also too, when you get to those higher levels of GI, some carriers will allow you to go above that guarantee issue limit. So even if the GI amount is only 100 or 150 or 200, you can still go above and beyond that. But when you go above the GI level, you will have to go through a bit of underwriting, right? So it's really going to be dependent upon group size and demographics. So unfortunately, there's just not one answer for that. It really comes down to, when we're doing the initial RFP.
Awesome. Thank you, Adam. Doesn't look like we're any more questions. Okay, I just want to remind everybody to go back to your agenda and continue the 11 o'clock. There will be the virtual trade show, so please visit your sponsors. Again, we couldn't do it without them. Thank you so much, Adam. Thanks for joining us. That was great. I'm happy to say I have a long-term care policy. So
good to hear. Well, I appreciate everyone's time and attention during this, right now in this unique setting, and really appreciate the opportunity to speak with you all today.
Thank you so much.
Right. Thanks, everyone.